All right, y'all, today we are going to be tying everything together and I'm going to be walking you through from start to finish how I come to a blank chart, mark up my chart, and then plan my trades for the day and for the week. So we're going to take everything we've learned thus far. We're going to start with a blank chart and we're going to end with a clear trading plan in which we have clearly defined entries, stop losses, and take profits. So make sure to like the video, make sure to subscribe to the channel because we are bringing you this trading course absolutely free here on YouTube. And we got to give a major shout out to our sponsor, Antarctic Exchange, the best trading experience in the world. This is a decentralized exchange made by traders for traders. And what sets this apart is, first of all, this is a decentralized exchange, meaning 100% self-custody of all your assets. You're not depositing your money into another company's wallet or platform. You're keeping everything self-custody in your own cold wallet or hot wallet. And because you're doing that, that means it will never ever require KYC or know your customer. The best part about Antarctic Exchange is ownership. All traders on Antarctic will get a portion of the trading fees that the exchange makes. And there's also an opportunity for you, the trader, to be the market maker and provide liquidity to the exchange. And in return, you will receive a proportionate amount of the market maker profits, including liquidation fees. Now, this has never been done before. Instead of your typical centralized exchange where everybody's trading against the market maker, and let's be honest, the market makers are the one who always win in the end. We are fellow traders trading against fellow traders, providing liquidity to each other, and it evens the playing field. Now, if you sign up in the link in the pinned comment and description, you will get the lowest fees, period, on any exchange right now that I know of. 0% limit order fees, 0.01% market order fees. This is a great deal on fees. It makes scalping on low time frames absolutely amazing because you can market in, market out, and make big profits on small moves. So make sure right now to go sign up to Antarctic Exchange. Links are in the pinned comment and description. I'll see you over there. If you are looking for a thriving trading community with pro traders to help you along on your trading journey, check out jasoncaspertrading.com to join the VIP Discord, the best trading community in the world, where myself and other instructors, although we do not give signals, we do walk you through our live trading every single day, multiple live streams a day, 3 or 4 live trading streams a day, where we're telling you exactly what we are looking for. And if we see a trade, we don't give signals, but we let you know what we are doing according to our analysis so that you can find confluence with your own trading analysis. Of course, inside you will find myself and other instructors, such as Thor, one of our great instructors, live streaming every day. Buoyant Man in one live stream. Dude took 4 scalp trades, absolutely crushed it. Of course, White Phoenix is in here as well, crushing it with his charts and his daily live streams. And of course, I'm in here too. We're trading Bitcoin, altcoins, stocks, Forex, commodities. You'll find it all in here, plus every single month. We do games where we give away thousands of dollars in cash prizes. And no matter what time of day it is, you will find conversations going on, people to help you, and our advanced TA channels where seasoned traders who have been vetted by the team are posting their analysis, their levels, and their ideas to help you on your trading journey. jasoncaspertrading.com to join the community. Links to this are in the pinned comment and description. Go ahead and click the link to join the best trading community in the world. All right, let's dive right in. We are going to start on a blank chart, and I always like to start on the monthly time frame, and you can do this for any asset that you are trading. I'm going to do it here with Bitcoin. What we're going to do is we're going to start on the monthly time frame. We're going to come over here to our ray, our horizontal ray. We're going to go ahead and click the magnet tool. What we're going to do is we're going to mark out all our monthly levels. So as I'm looking at the chart, I see we have a monthly level right up here at 102.362. I like to make little templates for these. So I have one right here that's a month. And the way you make a template is you just customize a little ray or whatever, and then you come down and you click save as and then give it a name, right? So this is my monthly. And then I'm going to go ahead and just kind of copy and paste that ray and then drag it to the next place that I see a monthly, which is going to be right down here. And of course, we did tap that monthly. So if we tap a monthly level, I make it TM for tapped monthly. Other things I will do is I will just look at monthly levels in the past that I consider still relevant. So for example, this tapped monthly right here, I consider this still relevant, and the reason why is because it's just a major support resistance flip. 71,400 is going to be a major support resistance flip. So a lot of times When you're marking your high time frame, I'm talking monthly and weeklies, I like to keep them on the chart even after they've been tapped oftentimes if they are a key level. And you can see right here, this tapped monthly is very key because it was support once, twice, three, four, five times, and then six times. And then up here, this tapped monthly was resistance once, twice, three times. And it's just a very key level. This is basically outlining the highs and lows of this range, right? So we kind of just want to keep those on the chart for our reference. All right, now again, this is a matter of preference. I can't tell you when and when not to do this. It's going to kind of take some experience. But the only thing I can say is if the level is significant, if you're deeming that level significant for a reason other than the fact that it's a monthly level, I would keep it on the chart. Okay, so we have one down here at 25,913. And we also have one down here at 23,138. And we have one down here at 16,529. Then what I like to do is I like to mark our naked monthly points of control. So we'll put on our PVP indicator and we will wait for it to load. And then we will mark our naked monthly points of control. So you can see that we have a naked monthly point of control right up here at 96,817. So I just Option V on a Mac to make a nice, not Option V, Option H on a Mac to make a nice horizontal line there. I double click it and I go to the text NM POC for a naked monthly point of control. Click OK. Now if you want, you could put the actual price of this level in, like 96,737. You could put the price in there so that you could see it on your chart. For example, 96,737. Let me move that so that you just know always, like, okay, the naked monthly is at this level. Even though it has a price tag next to it, a lot of times when you have a lot of lines on the chart, those price tags kind of group up and it's hard to tell exactly what's what. I typically don't do that, but it is an option. You can do that with all of your levels as well. We'll put back on our PVP indicator. We're going to go ahead and copy, paste this, and just move it to all our monthly naked points of control. This one from last month is already tapped, right? But we can keep it on the chart just so we know it's a high volume node. We'll go ahead and Control V down to here as well. Control V down to here. In that wick, we have a naked monthly point of control. I'm sorry, that's actually not a naked. This naked was hit in that wick, so that's not a naked point of control. I apologize for that. This one down here is going to be naked. And you're just going to go through and look for all of them, and we really don't have any for the entire bull run. This is as far back as the indicator goes, right? We don't have any, we just have these few that we've marked, so we take off our indicator. And what you can do now is you can go ahead and put these in a folder. So I'm going to put these in a folder. I click one, I hold shift, I click the bottom one. I'll put these in a folder called monthly levels, okay? Then I will come over here, click one, hold shift, click this folder icon, go ahead and make this NMPOC. And now I have these two folders of levels. Make sure to lock them so that they cannot move by accident. That will mess up your game, all right? So that's what we got going on here. We got our monthlies. We can turn them on and off. We've got our naked monthly points of control. And now we go to our weekly time frame, and we do the same exact thing on the weekly. So let's see what we got going on here. We've got a weekly level. Oh, God, I've gone Brit again. Maybe I should go German. All right, so we've got a weekly. I don't know what this is. Maybe a British German person. We got a weekly level here. Copy, paste it. Got a weekly level up here. Copy, paste it. This is, I guess, a tapped weekly. I'm going to keep this on my chart as a tapped weekly. Let's see. We've got ourselves the weekly down here, looking really nice at 80,006. Looking really nice down there. I like that weekly level. That one's been hit. This one. And you can just keep going, so on and so forth. But I'm just going to keep these ones here because to me, this is really the only relevant price action. But if you want to do a full chart markup, you would do everything, right? You would come all the way down to here and you would look for all these weeklies along the way down, right? Got one down here. And technically speaking, we could continue to put them all the way back into the previous market cycle, like $10,000, right? And of course, we can cross that bridge when we get there. I mean, if Bitcoin's under $20,000, then we can start to mark that. But you get the point. So we'll put on our PVP, periodic volume profile, and we'll mark all the naked weekly points of control here. So this one from that wick we've got right here. Go ahead and make our horizontal line, and we're going to make it NWPOC for the naked weekly. And then we just simply copy paste that and drag it around to every other place that we see the white line. Now we have our current weekly point of control here, right? This is not naked yet because the candle is not closed. But would you look at this one down here, just underneath the low, we have a naked weekly point of control that was not quite tapped. We've got one way down yonder, 62,343. And that's actually as far back as this is going to give us. You can get more data if you go to EXO. If you happen to have EXO charts, which I do use to get these levels, our naked weekly points of control, this can give us a little bit more data here in history, especially if you have the desktop version, right? So you can see that we've also have one here like 47.5. So you can mark those if you want, but really for the context of your trading, we could put one here, 47.5. I do recommend getting EXO at some point, or ATIS, or some kind of more advanced charting platform. But for now, TradingView is just fine, honestly. All right, so we'll put one here as well. Now what we do is we go into our folder, and we make these the weekly levels, and then we take our nakeds, and we make them naked weekly POC, right? Make sure to lock the folders. Boop, boop. Then you can expand and collapse them here. So you can just look nice and neat and see, look, naked monthlies, naked weeklies, right? Then we turn off our indicator, and then we go to the daily level. And we do the same thing on the daily level. So let's see where our dailies are. We're going to go ahead and mark them off. This could be a daily. Let's see what else we got. Got that. We've got that. We've got that. We've got, and I'm just looking to see where those candle bodies are, right? So I'm going quick, but we've already gone over how to obtain these levels. If you want more info, go back and watch that session. Come down over here. Did we hit that daily already? Nope, we kind of front ran that. Crazy. That's crazy. What a crazy front run that was, huh? Then we come over here to this area. Got these dailies here. All right, that's pretty much all we got there. That one was hit. So you get the point. we're back down to the 30s. It'll be so funny if like there's a crazy bear market and Bitcoin actually is down here and you're watching this video, or if there's like a crazy bull market, Bitcoin's chilling at like 250,000. These courses, they they become a little out of time pretty quickly, depending on what Bitcoin does, right? So we're coming back into that summer range of 2024 here. I'm sorry, 2023. Sheesh, man, time flies. All right, so we've marked out our dailies. You guys get the idea here. And now we just put on our PVP and we mark the naked daily, puntos del cantarón, which is Espanol for point of control. And as you can see, it's really not giving us that much historical data here on the previous range volume profile. So for that, you know, I recommend getting exocharts or ADIS, but this will suffice, especially if you're more of a day trader. But if you're a swing trader looking for those juicy levels, you're going to want to get on exocharts or something, or ADIS. I can't really speak for ADIS because I've never really used it, but people say it's the same thing. All right, so yeah, we can go to EXO here and get a little bit more data. Now, the web version of EXO is not even going to give you as much data as the desktop version of EXO, so let that be known as well. So this is why also, when you do your daily analysis and you put these things in your folders, you're going to keep that chart, right? Like these levels I just marked, if we don't hit them, you know, let's say we never come up to hit 92,000 and then Bitcoin goes down to 10K. Well, I'm still going to have these levels on my chart in 3 years, right? So let's see. Mostly we want the ones to the upside here. I think we had the 95.6. No, we don't even have 95.6. So we'll put 95.6. 95.6. And then we have 98.3. Right around there, 98.3. And I'm not putting the exact numbers in here just for brevity's sake. Then we have 100,000 on the dollar. I'm going to put that one in. This is a very important psychological level. 100,000 on the dollar. On the dollar. And then we've got 101.8, 104.7, 101.8, then 104.7, and then we've got 109. Looking fine, baby. 109 looking fine. On the dang dollar, pretty much. All right. Then let's see to the downside. We've got we have the naked daily at 76,460. Naked daily, point of control. And then we have one down here at 56,435. Right around there. All right, we'll just put it there for the sake. All right, 56,435. It's going to be a naked daily. Have my template here. All right, so now what do we do? Of course, we could keep going, but for brevity's sake, you guys get the idea. The more info you can put on your chart, the better, right? I'm going to go ahead and mark these as dailies. And make sure to lock up that folder. You don't want to move these things, man, because then it's a pain in the butt to get them back. So this is going to be naked daily point of control. We don't want naked daily point of view. We want naked daily point of control. I accidentally put POV there. Now what we have is a whole bunch of high time frame levels that will allow us to quickly and easily switch on and off these, right? So we could turn them all on at once. And now we've got ourselves a nice marked up chart. Now what we want to be doing as we're doing this is we want to be looking for confluences, all right? For example, naked weekly point of control on a daily. Beautiful. What else do we see that are some nice confluences? Well, up here we have a weekly and a naked monthly point of control together. And so we can start to mark out zones here and just kind of know, all right, if the price comes up here, that's a very, very key zone, right? The daily and the naked daily right together here. And then up here, wow, look at this amazing zone of resistance from 101.375 to around 102.5. We have a daily, a naked daily, a monthly, and a tapped weekly. And then up here, look at this, confluence, multiple things at one level, naked monthly, naked daily, and a daily. All right. So this is what we're going to do. Next, I like to look at my volume, right? So what I'm going to do is I'm going to pull fixed range volume profiles here. And I'm going to go ahead and look at our current ranges. Now, again, I recommend watching the session on this, but for me, this is our current macro range. Okay, so this is now giving me the value area low. And just so you know, these things are subject to change. So what I like to do with these big range pulls is make sure I click extend right, so that tomorrow and the next day and the next day and the next day, this volume profile is going to update automatically, because what you don't want to do is have the POC be right here, and then 5 days later you haven't updated your range, and now the POC just so happens to switch like to down here, right? That's a major change, but you might miss it if you don't click extend right. It's called value shift. It happens over time. Let's say more buying and selling happens down here than happened here, that POC is going to change, right? And this whole value area might change. So you want to click extend right. Then what I'm going to do is I'm going to look at the range that formed after we broke down from this value area low. All right. So we've got those two ranges. Then I'm going to pull this range from the pre-election. Okay. Now what I'm going to do here is I am going to remove the extend right. Why am I going to remove the extend right? Because this range is said and done. There's no more future that's going to happen with this specific range. But I do want to know the previous range value area high, the previous range point of control, and the previous range value area low. The reason why I want to know this is because many times assets, when they form a sideways range and then they break out of said range, if they come back inside this range, they will respect this old range and respect the value areas of that previous range. So we want to know these, because if the price does happen to come down below $70,000, these are now going to become relevant again. And then what we're going to do as we first come into this range is we're going to use these old value area low, POC, value area high. But as we form a new range, now we can pull a new volume profile in this area and start to use our new range levels, right? But when we first enter to an old range, we want to make sure that we have those old range data. So what I'm going to do now is I'm going to go ahead and put this into a folder called volume, or vol for short, right? So we've got our high time frame levels, we've got our volume. Excellent, excellent. Now what we're going to do is we're going to go over to our TPO chart. All right, now I don't know if the TPO indicator in TradingView is going to give me much history. Let's find out. All right, let's go over. We're going to go to the TPO volume profile, TPO profile, not TPO volume profile. Now, I don't know if I've gone over this before, but this is actually how I mark my chart. TPO. Go ahead and click this time price opportunity. All right. Click that indicator on. Then you're going to go to the 30-minute time frame. All right. Looks like, are we going to be able to get data from a long time ago? Let's see. It looks like, yeah, it looks like it goes back really far here. Yeah, beautiful. Absolutely beautiful. All right, so now what we're going to do is we're going to mark out things called single prints. All right, single prints. This is something you should mark out every day. But essentially, here's what a single print is. When you have a very fast move down, for instance, right here, all right, when you have a very fast move down, it's like one candle, you can see these profiles right here. These are actually time profiles. They have nothing to do with the volume. The volume profile is right here. This is the time profile. And when price spends very little time in an area, it leaves behind these things called single prints. All right, now I'm going to go ahead and click Style, and you're going to go ahead and highlight those single prints. All right, we can make them, let's say, yellow so that they're easier to see, a little bit more opaque. Okay, and what we're going to do now is we're actually going to mark out these single prints on our chart because these are going to be levels of support and resistance. Now, obviously, these are irrelevant because they happened a long time ago. But really what we're looking for on these guys is we are looking for the areas where the price is yet to touch them. Now on the way up, we're going to mark out the top of this like that. All right, we're just going to go ahead and call it, I call it single print filled. All right, single print filled. These are going to give us areas of support and resistance on the chart. So that's the TPO indicator, time price opportunity indicator, and we're going to be looking for these single prints. Okay, it's fairly simple, fairly straightforward. Now the reason why we're looking for these is because the price likes to come down and fill these single prints. Basically, you can think of it as there's like a vacuum in the chart, right? There's a vacuum in the chart of space that needs to be filled again, and I'm mostly looking for them in case we get a large move to the upside or to the downside. Oftentimes we will get a reaction from those single prints. All right, so let's see if we have any. We don't really have any up there. We don't have any down there. So what we're going to do now is we are going to come over here, because if you notice on the way down, like if Bitcoin continues to get another drop, we have single prints from here, from at 82. Okay, wait, no, that's actually, we have them down here in the 70s. All right, the 70s, 77.5. Single print will be filled right down here. Let's see where else we have them. We have them down here at 72.638. We have them down here. These are very secret levels, guys. All right, we have them down here. Yeah, and so on and so forth, right? But these ones are very important. All right, you want to basically get as many of these as possible. Now, let me answer a question. You might be wondering why. How do you know whether to put them on the top or the bottom of this yellow bar? So on the way down, you're going to put them on the bottom. On the way up, you're going to put them on the top. If price is dropping, you're looking for it to come to the bottom of the yellow bar. If price is pumping, you're looking for it to come to the top of the yellow bar. The reason is because we're basically looking to fill these areas on the time profile, like this letter B. There's only one row of prints in the entire row. That's why it's called single print, right? This one you got 4 prints in the row. This one you got 4 prints in the row, 3 prints in a row. We're looking to fill these rows where there's only 1 print, so we can now make 2 prints in there. And once we do that, boom, we filled those single prints. We filled the single prints, then we can get a bounce. All right. So this only works, by the way, in the 30-minute time frame. So you got to make sure that when you're doing this, you're doing it every day and keeping them saved in your folders. I'm going to go ahead and put these in a folder called single prints. And then what we're going to do is we're going to do some Fibonacci. All right, we're going to do some Fibonacci. So we're going to go back to our daily time frame here, and we are going to, let's make sure this is all single prints volume. This is our indicator. We're going to pull some fibs. So we're going to pull a fib from the macro high to the macro low. And this is going to be our macro fib pull. And I like to only keep the 618 and the 786 mostly on my chart. Then what I'm going to do is I'm going to pull a fib from the macro low to the macro high. Okay, so now we're building more levels to have on our chart here. And of course, we could pull a fib from this swing low to the high, from this swing low to the high, but I'm not going to do that right now. Because right now, if I'm making a trading plan, these are really the two macro fibs that I care about. All right, we're going to go to the 4 hour now, and we're going to pull some more fibs. I'm going to pull one from this swing high that we made here at about 99 to the low, because that's also going to be a pretty key Fibonacci. And I'm going to also pull one from this last high that we made here, 92 to the low. You can see we're already kind of above that. Let's pull one from up here. We already rejected perfectly from that 618, so I'll take this off the chart. And then I'm going to take one from the low that we made over here, right down here, to our high. And you can see that this is pretty much bouncing from that golden pocket. We front ran a little bit, but yeah, this is still a relevant fib. So we're going to go ahead and put this in a folder called fibs. And remember, these will need to be updated. If, let's say, the price makes another low, and this is no longer our low, right, what are we going to have to do? Well, we're going to have to come into our fibs, and all these ones that are based on the low, for example, this one, we're going to have to stretch it down more to wherever this new low comes. So don't forget to update your fibs every time price makes a new low or high on whatever time frame you're pulling these fibs on. Okay? And so now what we do is we have all our levels on the chart. We can put them all on at once and see where is the confluence. Now, right now, this chart is going to look like one of those memes on the internet where it's like, you know, you got all these lines on your chart. Okay? So what are we going to do? How are we going to figure out where we're going to be looking for a trade? Well, I like to start, honestly, with the volume. This is what I like to start with because the basis of all your trades is buy low and sell high, right? So these are going to be the major levels, in my opinion, these volume profiles, where we then look for other confluences. So now what I'm going to do is I'm going to put on the other levels here, like the fibs. Okay, so what do we see here about the fibs? Wow, well, would you look at this? We have major fib confluence right here at the value area high in the 786, major fib confluence right here at the POC in the golden pocket, major fib confluence right here at the value area low in the golden pocket, major fib confluence right here at the value area low of our local range in the golden pocket, major fib confluence right here at the previous range value area high in the Fibonacci golden pocket, right? So we have major confluences right here. Wow, that's great. So now we can kind of start to mark out, sorry, I had a ladybug on the screen, these levels as key zones to plan our trades. Now let's go ahead and put on some other levels. Let's put on some single prints. Whoa, would you look at that? Single prints on the golden pocket, which is also on the value area high of this previous range, right? So that's pretty cool, right? So now let's put on our nakeds. All right, look at this. We've got some naked confluence right around up here, naked daily right on the golden pocket. We've got ourselves a naked daily right on the value area high. We can put on our dailies. All right, look at this. We've got a daily level literally right in the golden pocket down here. We put on our naked weeklies. Put on our regular weeklies. We put on our naked monthlies now. Okay, wow. So, and our regular monthlies. So now what I'm going to do is I'm just going to mark out these major areas of confluence on my chart. Okay, this right here is going to be very key. I put a green box. I put my text 104.4 to 105. 104.4 to 105K. Why am I putting those prices here? Because if you highlight your green box, these blue levels will show up here on the chart. All right, so that's where you're going to get those prices from. Copy and paste it. I'm going to move it down to here. This is major confluence city. All right, we got a 786 fib. We got a naked daily. We have a monthly. We have a tapped weekly. All right, it's going to be key resistance. It's going to be 1017 to 1027. All right, sounds like a high fever. All right. Then we have major confluence right around these two zones here. All right, so let's go ahead and copy paste the box, drag it on down. We have our point of control, we have our weekly, we have our naked monthly point of control, and we have our 618. This is going to be super key right here. This is 96.2 to 97.2. 96.2 to 97.2. All right, we could also say that the naked daily, the daily, and the 0.65 is going to be a zone here. Okay, we're looking for where the most confluences are, 98 to 98.5. Boom, boom, boom. All right, these are resistances to the upside. And then would you look at this here? I mean, this is just beautiful. I'd say we have our golden pocket, we have our value area low of the macro range, and we have ourselves our naked weekly point of control. So it's going to be major resistance at 80, let's just say 90K to 91.5. All right, so that's our major resistances. And then major supports right now are going to be, well, number one, it's pretty obvious that this is going to be a major support. If we take the lows again, coming down below a value area low into the golden pocket, the daily, and the weekly. All right, so this is going to be 80.5 to 81K. 81K. Now we'll move it to the bottom because I like my supports on the bottom. Then we have our 786 on our daily together here. It's going to be a key zone as well. It's going to be 78.5 to 79. 5 to 79. And then I have to say, the next major area that I'd be interested in is simply just taking that low and getting a bounce from these key zones here. So let's just say this is 75. Let's just say 76K. Right? And then, of course, we have the major supports down here at the macro Fibonacci golden pocket, the monthly, the single prints being filled. That's going to be 70K macro support, because this is not only all those things, but it's also the value area high of that previous range there, right? So now what we've done is we've marked out our chart, and we have all the areas here where we would be looking for a trade, right? So what we can do now is we can kind of extend this. Actually, why don't we not extend them, but why don't we make them smaller? You want it so that they're not too big on the small time frames, but they're not too small on the big time frames. All right. Let's see. All right, we'll go back to our daily. What we can do now is put all these in a box. Now we'll make our color box levels. Okay, so what we can do is turn off all this nonsense down here. Or maybe just keep some things on, right? Maybe we do want to keep on our volume and our fibs, for example, right? And now we just have like these nice boxes. Okay, so here's now what we do. We plan for trades based on these levels. Okay, we plan for trades based on these levels. So, for example, the two nearest trades that we would be looking for here would be a short from this zone here and a long from this zone here. What we can do is we can plan this out like this, okay? We're going to use our short tool here, and if we do get a rejection from the macro value area low of the range, well, we would say the trend is our friend until the end of the trend. We have our high, our low, our lower high. We'd look to make a lower low. So we'd probably be shooting for taking out this low here, coming down towards our Fibonacci golden pocket, okay? So this is our trading plan here. It's a 9-to-1 risk-reward ratio, and this is how we're going to plan out our trade. Let's say we have $1,000 in our account, right? We're looking to risk 1%, all right? So because we have a 2% stop loss, we're going to put about $500 on the trade, all right? We have $1,000 in our account. We have a 2% stop loss. We put $500 on the trade. So we know already we're going to put, let's say $450 to account for fees on the trade. And we're looking to make $90 here, 9% on our total trading account, $90 while we're risking 10. So right off the gate here, what we can do now is set a little alert here. And the alert can say short Bitcoin, short BTC, question mark, because we're going to have to wait and see if we have confirmations. You could even put 450 on trade. You could put stop loss at 91.8, 91.9, right? So you could already know when this alert goes off here what you are looking for to enter the trade, just to remind yourself, right? You could even put here like a little, a little text bubble here and just say stop loss 91.1, 91.9, I mean, right? And then what you're going to do is you're going to put this in a folder and call it short setup 1. Okay. Now you turn this off. Let's go to our longs. All right. We're going to plan for a long from the liquidity grab of this. Now, technically speaking, I would say that if we're looking for a bounce from this area, you could have 2 trades here, right? You could have 2 trade setups. One with our target of the next resistance for TP1. And then also, because we have 2 boxes here, I would say we have 2 trade setups on our hands. All right. And both of them would have the same targets. And so in both of these instances here, we can start to plan for our trade setup, right? So let's just go ahead and this will be our plan. And of course, because we know this is key resistance up here, this is where we need to take our take profit 1. All right, so now let's plan for these trades with a take profit 1 at the value area low of the range. All right, so we might even fudge the take profits 1 down a little bit here. Okay, so here's what we're going to do. Because we know that we need a 1.75% stop loss, that means we can do our little formula here, which is the amount of risk, which is $10 divided by 0.0175. That means we put $571 on each trade, right? So $571. I'll just do 550 to round down because of fees on the trade. And then what we can say is we want to hit our TP1 at $89, right? So TP1 at 89, and we take out 50% of that trade. All right. Now we're planning for this, and I'll tell you why we're planning for this in advance. All right. We know we're risking $10. Our TP1 up here, because this is a 6-to-1 risk reward ratio, our TP1 means if we take out half the trade, we've already made $30 at the top, right? At this take profit 1. Then what we've done is we've guaranteed that we are going to make money on the trade, right? We guaranteed a winner. At our TP1, we take out half the trade. We've guaranteed a winner. And now we could even keep our stop loss where it is and still have a win, even if that stop loss gets hit, or we could move our stop loss to the entry, right? But that TP1 50% is guaranteeing us now a winning trade, and then we can let the rest of the trade ride, because if we reclaim this, there's a really good chance we're actually going to make a new all-time high, okay? So once we've guaranteed a winner on the trade, right, this is part of our plan here. We're planning for our take profit one at around $89,000-ish to make 30 bucks, having risked 10. But then we could say, you know what? There's a good chance if we reclaim the range, we could pump another, 35%. We might even come up to like our next major target, like $112,000. So at $112,000 now, this is now a 22 to 1 risk reward, meaning with 50% of the trade, we're still up 11%. We're still up now $110 in unrealized profit after guaranteeing a 3% win, right? So now what we could do is we could take out another 50% of what's left up here, right? Let's say TP2 at 112. Take out 50% of what's left, right? Of what's left. And that's actually going to lock it now another 50 bucks. So at our TP2, we've made $80 on the trade, right? We made 8% on our whole trading account so far in one trade with a take profit 1 and a take profit 2. And then we could just say, you know what the heck, I'm just going to let this thing run and take out little profits along the way, because who knows, maybe we do have a super cycle. Maybe everyone's right about those super cycle Michael Saylor types, and this trade just keeps on going, right? Who knows? So we've planned right now for this long trade here, and you do the same thing for this trade down here. We planned for this. We know exactly how much money we're putting on the trade. We know exactly where our stop loss goes. We know exactly where our take profit 1 is. We know exactly how much we're risking, exactly how much we're looking to make it take profit 1. We know exactly how much we're looking to make it take profit 2. And then we say, well, and then we'll let the runner run if it runs, right? Now, this is just one example of how to plan your trade. You might plan your trade with just a take profit 1 at 90K and say, you know what, I'm just going to take my 6% gain at take profit 1 instead of waiting for this massive move to make an 8% gain. It might be more worth it for you to have 6% gain right here to close the whole trade than to wait for potentially, maybe not even happening, an 8% gain, it's just 2% more at 112, right? Or maybe you want to close the whole trade at 112 and you end up with a much juicier gain. You'll end up with like a 14% on the account if you took profit 1 here and then close the rest of the trade here with no runner. This is where it comes up to your own personal trading preferences. But the most important thing is that whatever you do, you are never going to take profit on a trade where the profit is less than what you risked. I recommend not taking profit on a trade until the profit is at least 2 to 3 times more than what you risked. Because if you end up saying, oh, I'm in the green, and you close the trade right here, let's say for example, right, and you're up, 2% on your whole account. Well, guess what? You were also, now you're up 10 bucks and you were risking 10 bucks. That means you make 1 win and then 1 loss, and you're going to be in the red because of fees, right? 1 win, 1 loss, you're in the red. So you want to make sure that TP1 is actually worth it for you. So a 5 to 1 risk reward ratio, take out half the trade, maybe a little bit more than half the trade. Now you risked 1 to make 2.5 if you take out half the trade here. So it's very important that whatever you do, you make sure that your take profits are always going to guarantee you more profit than what you risked. Okay. Now you put this in a folder called long 1. Long 1. All right. Now we are going to set alerts. Click the little plus button. Set an alert. Long 1. Make sure you specify the information you need, like if you're trading multiple assets. And we're going to do this at all of our boxes, okay? We're going to do this at all of our boxes. We're going to have plans at all of our boxes. And then what we do is nothing. We've done the work. We've done the work, right? We can relax and wait for the price to come to one of our levels before we even have to worry about taking a trade. All right, we relax and we wait for price to come to one of our levels before worrying about taking a trade. This right here alone is going to help you immensely. Because instead of coming and trading based on your emotions and based on what's happening now, you say to yourself, well, I don't really care what happens, because if we dump, I have long trades to look for. And if we pump, I have short trades to look for. And if nothing happens, I don't have to force a trade and lose money for no reason. Now, this has been a bit of a swing trading tutorial so far, how I would mark a blank chart and plan for like higher time frame trades. Now I'm going to show you how I would plan for day trades and scalp trades in the next session. So make sure to stick around, guys. Make sure to like, subscribe. Make sure to check out Antarctic Exchange and the Casper Crow VIP Discord. Links to all that in the pinned comment and description. Peace.